Examining Canada's economic landscape reveals a striking set of parallels with Australia, especially when it comes to the housing market and the broader pressures shaping financial security. In both countries, the cost of buying a home has outpaced wage growth for years, making it increasingly difficult for average-income households to secure stable housing. The financial strain is familiar. Young Canadians, much like their Australian counterparts, now face deposit timelines that stretch into the double digits, and the average age of first-time buyers continues to rise in major cities. The underlying causes are similar as well: speculative investment, policies that favor property over other assets, and a long-running shortage of new housing supply. Both nations have watched affordability erode as property has become the primary vehicle for wealth building. Canada, however, operates without the buffer of a massive resource sector like Australia's. When housing markets soften, Australia can rely on iron, ore, or gas exports to stabilize its economy. Canada's resources, while significant, do not provide the same level of national insurance, leaving its economy more exposed to swings in real estate cycles. This lack of a safety net makes the consequences of housing volatility more pronounced and leaves policymakers with fewer tools to cushion downturns. On the productivity front, Canada has managed to outpace Australia, recording annual growth of around 1.2%. This edge comes from a more diversified economy, with stronger contributions from manufacturing, technology, and services. Canada's higher ranking on global economic complexity indexes reflects this broader base, allowing the country to better absorb shocks and adapt to changes in global demand. While Australia remains heavily concentrated in mining and agriculture, Canada's mix of exports includes not just resources, but also advanced manufacturing and emerging tech, providing a measure of resilience that Australia currently lacks. Both nations rely on immigration to drive economic growth and offset aging populations. Canada's population growth rate has tracked closely with Australia's, with net migration serving as the main engine behind workforce expansion. This shared strategy brings similar challenges. Most newcomers settle in the largest cities, Toronto, Vancouver, Sydney, and Melbourne, putting immense pressure on housing, infrastructure, and public services. Median commute times in Canadian cities have climbed, echoing the congestion and service delays seen in Australia. The tension between the economic benefits of migration and the strain it places on urban systems is a defining feature in both countries. Housing policy failures are another point of convergence. In Canada, tax settings like the principal residence exemption and lenient capital gains rules encourage real estate speculation, mirroring Australia's negative gearing and capital gains tax concessions. Both countries have resisted significant reform, despite warnings from economists about the long-term risks of over-reliance on property. The impact is visible in the rental markets, where vacancy rates in major Canadian cities have fallen below 1%, and short-term rentals have removed significant stock from long-term housing. Construction delays and rising costs, driven by zoning restrictions and labor shortages, slow the delivery of new homes in both countries, even as demand continues to rise. The banking systems in Canada and Australia also share vulnerabilities. Canadian banks hold a large proportion of their loan books in residential mortgages, closely mirroring Australia's exposure. High household debt levels are a feature of both countries, and as interest rates rise, mortgage stress becomes more acute. The structure of Canadian mortgages, which typically renew every 5 years, introduces periodic payment shocks, while Australia's variable rate system creates ongoing adjustments. In both systems, the risk is that even modest increases in rates or declines in property values can ripple quickly through households and the broader economy. Retirement savings frameworks further reinforce the similarities. Canada's RRSP and Australia's superannuation system both encourage long-term saving, but lock significant wealth away until later in life. While Canadians have some flexibility to withdraw funds for home purchases, the overall effect is a population that is often asset-rich but cash-poor, especially as housing and retirement systems intersect with rising living costs.